Thank you. May 2016. So let's open that question. Coincidentally, I've just opened it. So open that question. So for psychological preparation, the class ends at 11 sharp, or when we are done with 2 questions. My target is to do 2 questions to wind up that, or whichever comes earlier. Whichever comes earlier. So that is my target. So we'll do this, we finish, we go for a small break, then we come back. But once we are done, if we are done with the 2 before that time, also is okay. So open that question. Allow me to read. It says, the following, Asara Limited, which has been operating in the telecommunication sector, has been posting successive trading losses. The directors of the company have made a proposal to reconstruct the company by transferring the entire operations of the company to a new entity to be called Zawadi Limited, with effect from 1st April 2016. So Asara is the old company. They have proposed to reconstruct the company, and they are transferring it to a new company called Zawadi. So that is external reconstruction, where a new company is being formed to take over operations of another company, then that is external reconstruction. The following statement of financial position relates to Asara Limited as at 31st March 2016. So their balance sheet is as follows, the way you can see it there. The balance sheet of the old company, Kennedy, that question there. So we want to go to the additional information. Number one additional information. Zawadi Limited issued 3 new ordinary shares of Sh10 each for every 7% cumulative preference shares in Asara. In addition, the 7% cumulative preference shareholders in Asara Limited were issued with the 2 new 10% preference shares of Sh10 par value in Zawadi Limited for every 7% cumulative preference shares held. Correct. So, Asara is being liquidated. It is being closed down. So the providers of capital, and the main providers of capital are the preference shareholders and ordinary shareholders. So in the event that the entity is being dissolved, those providers of capital should be compensated. In fact, the word should is not even the right one, must be compensated. So the examiner will always direct you how they are being compensated. Compensation can be either in form of shares, debentures, or cash, but cash in a very minimal situation. Mostly they are given shares and debentures in the new company which is being formed. So The examiner is just communicating how they are going to be compensated, and to that effect, allow me to go back again to note 1. So note 1, they are saying, Zawadi issued, Zawadi is the new company, which is tasked to compensate the shareholders in Asara. So Zawadi issued 3 ordinary shares of shillings 10 each for every 5.7% cumulative preference shares in Asara. So they are communicating to you how preference shareholders were compensated in Asara. They were given ordinary shares in that new company. In addition, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 per value in Zawadi Limited for every 5.7% preference shares held. It's just that compensation. Let's proceed. Number 2, the preference dividends in Asara were 3 years in arrears. The 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares of shillings 10 each in Zawadi and shillings 20 of 8% debentures in Zawadi for every shillings 100 of the preference dividends in arrears. So these people had not been paid preference dividends. So the examiner is communicating on how they are being compensated. They are getting, I don't know, ordinary what. We'll come back. Number 3, the existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of shillings 10 each in Zawadi and shillings 40 of 8, that is 8%, of 8% debentures for every shillings 100 of the debentures. So, number 4, the ordinary shareholders in Asara were issued with 2 new ordinary shares of shillings 10 each in Zawadi for every 5 shares held. So that is also how they are compensating the ordinary shareholders. The current liabilities of Asara were taken over by Zawadi at book value, no problem. The assets of Asara were taken over by Zawadi at their fair values as follows. So they took the assets at those values. Okay. Number 7, the liquidation expenses of Asara amounted to 30 and were paid by Zawadi. No problem. All the above transactions were completed fine. Required 1, A, the relevant ledger accounts to close the books of Asara. So if you go back to where I gave you the process, which books you're supposed to close, 1, there is what we call realization account. We have sundry members' accounts, and even the new company's account you need to close in your books. Then 2, once you have closed the books of Asara, you will prepare journal entries to record the relevant transactions in the books of Zawadi. Then statement of financial position of Zawadi. So that is after takeover. So allow me to start with the relevant ledger accounts. So you need to know those ledgers. The ledger accounts which you are supposed to prepare should be the realization account is the main account during external reconstruction. It is the main account. So you come up with the realization account where you close all the assets, you close all the liabilities, and you adjust any other form of external reconstruction. So come here and give me realization accounts. So we are kicking off. There is some lights here, so I need to know what I should do. So to avoid reflections, let me just work with minimal lights. So realization accounts. have something like that. So shillings are in thousands. So this being our first illustration will be poly, as we understand. So this company is being dissolved. When you're dissolving the company, it means in your books, you need to close off all the asset accounts, all the liabilities. So how do you, let's start with assets. How do you close the assets? Assets, we all know that assets have debit entries. So when you are closing off assets, you credit the asset account. To close an asset, you credit the asset, then you close them against. This is the main account where you close them. So you debit realization account. So with the book value, not taken over, the book value. With the book value of the assets, except intangible till that happen. Book value of all the assets, except intangible assets, you close them to realization by debiting realization account, because the respective asset accounts will be credited. You will credit the asset accounts to close off the company. So credit the assets off head, then you debit realization. So in the next question we'll do, I'll not even waste much time saying why we are debiting here. I want you to know that all the assets at book value are debited in the realization account to close off. So let's start by doing that. So from top, at book value, you know we are still dealing with the old company, which is Asara. So PPE, then 957.4. Available for sale, AFS 647. Then goodwill and preliminary expenses, those are intangible assets. Intangible assets, if you check your notes, we don't close them to realization. It will affect the ordinary. When they are going to be paid, we will close to their accounts. So skip those two. Inventories. 872.5. Receivables 689.9. Financial assets 216.4. There. So you start by closing those assets. There are two items, I just want you to master them immediately as we progress, which normally comes on the debit side. One, the liquidation expenses, which you will receive. You know, almost in all these questions, you will find the new company paying dissolution cost. So that dissolution cost, when it comes, you will credit the cash book, because you are going to incur an expense. So when you incur the expense, you credit the cash book against realization. So check note number 7. Check note 7. The liquidation expenses of Asara amounted to 30 and were paid by Zawadi. So the liquidation expenses, you credit the cash book, bring it here. So in all those questions, you will find the same thing. So just debit the solution cost here. So cash book, 30, liquidation costs, 30. Another item which comes on the debit is the preference dividends. Preference dividends in arrears. The preference dividends in arrears is a claim. Someone is saying, kindly advise the getting the sound from the teacher. What is cool with the issue? Is there an issue with the audio? Someone is saying no sound. Kindly advise.
No
I don't know,
issue.
someone to.
From my end, no issue.
That is Purity.
Yes.
Victor is saying it is okay. Lawrence is okay. Marcy is okay. And Nelson is okay. Brenda okay. George okay. No issue at all. Lucy is okay. Halima. Then what is the issue? Ken is saying loud and clear. So, Purity, what is the issue?
Sio mimi nilikuwa na shida. Mine, I said it's okay.
Basi huyo ndio yake iko na shida, si ndio? Afanye nini? What should that person do?
Log out, log in tena.
Okay. Tumwandikie hapo. So I hope he or she is checking. So I was saying the items which comes on the debit, the liquidation expenses, you will credit the cash book on payment, then you debit realization. One more item which comes on the debit is the preference dividends in arrears. You know, when preference shareholders are claiming, they are claiming preference which they have not been paid for some years, they will credit it in their account as part of their claims. Remember, share capital is always on the credit side. So when these people are claiming, when they are claiming that they have not been paid, it means their claim also forms part of what is due to them. We should also be on the credit side. So with preference dividends in arrears, you credit the preference shareholders account, which is coming later, then debit realization. So those two, apart from the assets, always remember to add those two on that side. So bring here, preference div in arrears. Preference dividends in arrears. So pole to examiner will tell you, check note number 2, additional information number 2. Good. So note 2, the preference dividends in Asara were 3 years in arrears. The 7% preference shareholders in Asara will accept, what they will accept, just bring the arrears in full. Bring the arrears in full. So it will be 7% times, check the total value of the preference in the balance sheet. In the balance sheet, you will see the 7% preference share capital to be 4. So you multiply 7. So every year, they get dividends at the rate of 7% of the 4, and they have said it was 3 years in arrears. So times 3 years. So how much do we get to that effect? For those joining class now, Rose, Angeline, we have just started from here. You can copy very fast, you will catch up. So Alima and the others, 840. 840. There. So on the debit, and please by the way, let's be very keen. You know, it's good to tell students the truth. In exam, it is either reconstruction or earnings per share. Those two, either one is there or the two of them, but the two can't miss. That is what you're supposed to know. Either all, at least one. And for this sitting, I must be honest, for this sitting, we are focusing highly on EPS. We're supposed to bring earnings per share. That is our aim after this. But if they miss out EPS, please expect external reconstruction. Or it might be external plus earnings per share, those two. So it's critical for us as far as exam is concerned for this sitting. So on the debit of realization, you bring assets, then check the liquidation cost and the arrears. The same thing now, you close liabilities. Angel, mute yourself. Close the liabilities accounts. Liabilities, as we all know, liabilities have credit entries. So it means when you are closing a liability account, you debit because liability has a credit entry. So you debit the liability, then you credit realization. So I want you to master that realization account is credited with the liabilities and debited with the assets. So have there, let's go to the liabilities. So liabilities, except for the debentures, you know, debentures are also providers of capital. So you go for the current liabilities, not non-current. Non-current mostly, they are compensated because they are part of loans. So go to current liabilities, you'll see bank overdrafts. So bank OD, bank overdrafts. This is 775.8. Payables, 1962. Tax, income tax, 275.1. Then there is another item which I want you to master, which comes to the credit of realization, known as, I'll tell you why we are crediting, known as purchase consideration. So purchase consideration, the new company, Zawadi, have it there. So that one we don't have right now, but it should come there. So purchase consideration, you know, Zawadi is our customer because Zawadi is taking over our company. Zawadi is taking over the company. So we will debit their account with what we need them to pay us. We invoice them like just normal customers. So we'll debit the new company coming in to buy our company. Then we credit realization with the amount which they will give us. So at the start, that is how your realization account should look like. And by extension, this account should always balance automatically. It should not have variation this side and this side, because remember we are dissolving the company and people are moving out. So you cannot have balances. So this account must always balance. So you will leave it hanging until we are done with all other ledgers. Any balancing figures on those other ledgers, you will close them to this account. So as yours is to know which ledgers are we preparing. So I said one, we prepare realization, then we go to sundry. Sundry members are the final accounts where shareholders are compensated. Shareholders are the preference and ordinary. So allow me to start with the preference. So leave good space, just the way you have done. To be precise, you can leave like 4 lines, both sides. So you come here and say, preference, 7%, preference, sundry. Preference, sundry. It should be preference sundry members, but now those names are not very much important to us. What is important right now is the one sundry is enough. So have such kind of account like that. So people are ready. So the company is being dissolved. Everyone wants to be compensated. One of them is preference. So before you tell us compensation, tell us how much you are claiming. So remember, share capital always on the credit. So you tell me balance brought down. Say here, balance brought down. We want to know what is due to them so that we compensate them. So balance brought down, go to the balance sheet. Go to the balance sheet. Go to the balance sheet. The 7% cumulative preference, 4. So their capital, they were claiming a capital of 4 million. That is what they want to be compensated in the event of dissolution, the way it is happening right now. Something else they are claiming, they have never been paid dividends for the last 3 years. So they are also claiming dividends in arrears of 840. So apart from this capital, they are also requesting preference div in arrears of 840. Preference dividends, they are also requesting for 840. So in total, these people want to be compensated 4840. That is what they want to be compensated. So now, when they get compensation from Zawadi, Zawadi is the one tasked to pay these people. You debit their account to reduce their claim. So you come on the debit side, you say from Zawadi. From Zawadi. So anything they get from Zawadi, in whichever form, you debit here to reduce their claims. Correct. So let's start. So unasoma tu pole pole how they can get so many items from that company to compensate those balances. So they were compensated in note 1 and note 2. Note 1 and note 2 is going to be long because there is compensation for this and compensation for the arrears. So in note 1, Zawadi issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Asara. In addition, no, let's not go in addition first. Let's finish this one. They received ordinary share capital. They received ordinary share capital. On what basis? They received 3. They were receiving 3. They were receiving 3 for every 5. 3 for every 5. 3 for every 5 preference. So for every 5 preference, you will receive 3 ordinary shares. So times the number of preference. So the number of preference was 4,000, but 4,000 is in monetary. So 4,000 divided by the par value, which is 10. It comes to 400. But you see again, we are going to multiply again with the value because they gave them at 10. So there's no need of wasting time dividing by 10, again multiplying by 10. So just multiply straight with the 4,000. So those are the value of ordinary they got. They got 3 for every 5. They were having 400, but again they are multiplying by 10, dividing by 10 and multiplying by 10, just waste of time. So 3 over 5 times that, what do you get? What do you get? $2,400. So they will complain. Okay, but let's take this thing very practical. See ati kitu tunafinya sana. Practical. And here we are the liquidators. Sisi ndio tutafunga hii kampuni. Tushalipa kila kitu, all the external liabilities paid, now tumebaki na shareholders. So they are this preference, they brought their money in this company of 4. They want to be compensated because the company is going away. So we told them there is no money. Nini mwende mkue shareholders in that company. So we gave them 3 ordinary for every 5 you have. So they multiplied, ikakuja 24. They will complain. They will say, we are telling you to pay us 4, you are giving us 2.4. Haiwezekani. And that is why tunasonga wakisema, go back. In addition, so they had to complain. In addition, the 7% cumulative preference shareholders in Asara were issued with 2 new 10% preference shares of shillings 10 per value in Zawadi for every 7% cumulative preference shares held. So they got also preference share capital. They got preference share capital on what? Sorry. This one I have to be very specific. They got 10%. 10% preference share capital. You know, this side they will get 7%. So the other side, they are being given 10%. So 10% preference share capital. On what basis? On what basis? On the basis of equality. They got 2 new. They were getting 2 new for every 5. Kindly check. So they got 2 new for every 5. And they had 4. That's what the examiner said. So preference shares, they will get 2 for every 5. Yeah, correct. 2 for 5 times 4. How much? Ukipata kitu kidogo watu wakipewa kwa dissolution nashukuru Mungu. Some people come out like that without anything. So at least there is something. Alima, 1,600. So for their capital, are they fully compensated for the capital? Wachana na mambo ya arrears. For the capital, are they fully compensated? See, lazima wape fully compensated. They can also lose. So Marcy says yes, because 16 plus 24, that is 4,000. So wamefurahia sana. So for this capital, they are fully compensated. They are ready to move. lakini wakishalipwa wakaenda nyuma ya tent, wakajiuliza na dividends hazijalipwa miaka ngapi? 3. What do you people think? Tuende negotiation. Let's go for round table. So they went back to the round table. They want to discuss about the 840. So let's discuss the 840 in note number 2. Let's discuss the 840 in note 2. So in note number 2, the preference dividends in Asara were 3 years in arrears. That one we know. The 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares to Adiki. Another ordinary shares coming in, ordinary share capital, ordinary share capital. We are being told they are accepting 3 new. Kisikia 3 new, hiyo 3 inakuwa juu. 3 new will accept 3 fully paid ordinary shares of shillings 10 each in Zawadi and shillings 20 of 8% debentures in Zawadi. So there are 2 items here. So again, extend this. Before even we see how it's happening, they again got 8% debentures. 8% debentures. 8% debentures. 8% debentures. And shillings 20 of 8% debentures. Hiyo hapo nataka mkue keen inaleta issue iko hivi. The 7% preference shareholders in Asara will accept 3 fully paid ordinary shares of shillings 10 in Zawadi and shillings 20 of 8% debentures in Zawadi for every shillings 100. For every. So this for every applies to the 2 of them. To the 2. So for ordinary, they are getting 3 for every shillings 100. Here, they are getting 1 debenture. Hiyo mambo ya shillings 20 ni 1 debenture with a value of 20. So they will get 1 debenture for every shillings 100. That interpretation sometimes inaletanga issue, but you see they are saying, I repeat, na hiyo kizungu inakuwa uniform in all questions. They are saying the 7% cumulative preference shareholders in Asara will accept 3 fully paid ordinary shares of shillings 10 in Zawadi and so unaona mpaka hapo wajasema for every. Instead they have added something and shillings 20 of 8% debenture in Zawadi for every shillings 100 of preference dividends in arrears. So they are getting 2 items. 1, 3 ordinary for every shillings 100 in arrears. How much is in arrears? 840. This is what is in arrears. 840 is what is in arrears. The same. They get 1 debenture for every shillings 100 in arrears. So times shillings 840. However, ordinary, each is having a value of 10. So this one multiplied by shillings 10, but this one, debentures, each at shillings 20. They said shillings 20. So 1 debenture with a value of 20. So you get 1 debenture for every shillings 100 in arrears. The total in arrears is 840, but each debenture at 20. Ordinary, you get 3 for 100 in arrears times the total arrears, but ordinary at shillings 10. I hope you understand. So give me those figures for ordinary and for the debentures. Use space in the ordinary will be how much? Someone? So the answers are 252 and 168. 252 and 168. Full stop. So hapa kwa arrears ni kama wamepoteza. Because they were claiming 840, imekuja 252 and 168. Hiyo iweze fika 840. So we are tired with them. Any balancing figure, close it to realization. So of course it will balance this side because now 840 minus that minus that. The other one was fully compensated. So this balancing figure, you say 2 to realization. Realization. That is our balancing figure. How much will that be? How much will that be? $420. So we have 420. So it has balance on the debit. It means in the realization, you take it on the credit to complete that entry. So you close it here. This account has funga kila kitu. So it has balance on the debit, bring it on the credit. You say preference, sundry. The one sundry to your mechanic. Preference sundry, 420. Preference sundry, that is 420. 420. Very good. Another account, we need to close. So wanaitwa ordinary. Ordinary ndio wenyeji. After preference, we are done with preference, we bring ordinary. So allow me to delete this. I want to work out ordinary also in this space. I hope everyone is done with it. For preference. Yes. So right there, ordinary, sundry. So sundry, we said, is the final account of settlement. There is no account where they will be settled apart from this. So ordinary, sundry. Ordinary, sundry. So these are the owners of the company. We want to listen to them. So wameenda kwa liquidate. Wanaulizwa nataka aje. Wanasema si umelipa kila mtu, kwani sisi pia tulikuwa wenye kampuni. So how much was your capital? So bring here balance brought down. Go to the balance sheet. Check the capital of the ordinary shareholders. So ordinary, they are claiming here 6. They are claiming 6. Lakini wao before were compensated, lazima waumie kidogo. So that is 6. Check under equity. Under equity, any reserve, revaluation reserve, share premium, retained earnings, all should be claimed by the ordinary here. So let's check. There was revaluation of 400.8. Belongs to them. So revaluation 400.8. $400.8. So that one they will claim. They will claim. Then there is revenue reserve. Revenue reserve is the other name of retained earnings, but it is negative. So the negative, if it was positive, fine, it will come here, but it's negative, so it will reduce their claim. So that is called accumulated losses. So accumulated losses. Negative retained earnings is accumulated losses. 3822. 3822.7. 3822.7. Again, before we compensate them, if there was any intangible assets, si kampuni inafungwa kama ni goodwill pia inapelekwa huku kwingine. So goodwill, any intangible asset must be written off, and it is written off against the ordinary. They are the people, because when the goodwill was there, when the company had reputation, the real owners of the company were benefiting from that goodwill. Now that the goodwill is no longer there, they are the people to suffer. So all intangible assets must be written off against ordinary. So come here and say goodwill. There was goodwill of 120. Also, there was preliminary expenses. I hope you know what are preliminary expenses. Preliminary expenses has a wide range, but mostly they are the pre-incorporation expenses, the expenses which they are incurred when incorporating the company, mostly NEO. Others can be some small issue, but pre-incorporation costs are the ones which we call preliminary, but they are intangible. So also write off here. So write in full, preliminary expenses amounted to 87.8. So before we even talk of compensating them, we must subtract those items from their claims. Now let's compensate them. Let's go to note 4. So I make up from Zawadi. So let's Zawadi give these people something. They are not that bad. The ordinary shareholders in Asara were issued with 2 new ordinary shares of shillings 10 in Zawadi for every 5 ordinary shares held. So they also got ordinary share capital. They got ordinary share capital on what basis? On the basis of 2 for every 5 times. The ordinary we have is this one here, 6. But now we are supposed to take 6, divide by the par value. Par value is 10, then again we multiply by 10. Complete waste of time. So just multiply by 6. So they are getting 2 for every 5 times that 6. That will be how much? That will be how much? 2,400. Kusha. Any balancing figure? Tunafunga. There is no any other compensation. That is the end. So can you balance it off? Can you balance it off? Tell me the balancing figure and on which side. Balancing figure and on which side? So I'm being told by Rose, 29.7 on the credit, Kennedy has confirmed. So to realization, 29.7. So that is the balancing figure. So you close it to realization. Don't have balance carried down to where? And we are closing the books. So it is balancing on the credit, 29.7. So take it on the debit. On the debit of realization, you say ordinary, sundry. So ordinary sundry, 29.7. 29.7. Haya, kuna watu wengine hapa wanakuanga watu wa kutupatia loan. So those three are the most critical. Actually, the most critical accounts are those three. Though there are two other accounts I want to come up with, because sitafunga without them. But the critical accounts to close off the books of the old company are these three, those ones. So I want you to master those three, then you are good to go. But there are some two. One, there are people who normally gives us a loan. Wakasikia kampuni inafungwa na loan ingalipwa. Watakimbia wakuje waseme what is not happening. What about our loan? What's happening with it? The debenture holders. Hao pia lazima waambiwe mambo ya loan yao venye inaenda. So I always advocate we come up with that account. So check non-current liabilities. Check non-current liabilities. There was 10% debentures. 10% debenture, that is a loan of 4. So give us here 10% debentures. 10% debentures. 10% debentures. Debenture is a liability. So their balance brought down. They are making noise here that they need 4. So if the liquidator is a good person, we listen to them. And yes, he listens to them in note 3. He listened to them in note 3. So let's check note number 3. Let's check note number 3. The existing 10% debenture holders in Asara were issued with 5 fully paid ordinary shares of shillings 10 each in Zawadi and shillings 40 of 8% debentures for every shillings 100 of the debentures. So from Zawadi. So let's see how they got compensated. Let us see how they got compensated. How they got compensated. One, they were given 2 items. One, ordinary share capital. They got ordinary share capital. On what basis? They were issued with 5 fully paid. So they got 5 fully paid ordinary share of shillings 10 each in Zawadi. And so you and in Abuja Badai, and shillings 40 of 8% debenture for every shillings 100. So for every shillings 100 of the debentures. So you get 5 shares for every shillings 100 of the debentures, and debentures in 4. So you multiply with shillings 4,000. So what do you get? Get 5 for every 100 times 4. That one will be how much? 200 per yake. Alima, you know. Yes, it can be. So 200. Use the magarao. Yani, tuko na loan ya 4 million, loan atupea 200,000. We complained. They complained further. Wakaongezwa. Hapo walisema and shillings 40 of 8% debentures. So 8% debentures. They got 8% debentures. They also given 8% debentures. On what basis? They were getting one debenture for every. If for every nashika zote mbili na hii, for every shillings 100
Kikuyu ni karibu.
times 4. But each debenture, you get one for every 100 times 4. Each debenture was credited at shillings 40. So you multiply by shillings 40. Yeah, that is true. If you check that interpretation, Lamek, Lamek ni ile tu tulisema, what was the basis? Hebu let's check. Unajua hiyo kitu naona ikiwa kidogo sana. Hebu let's check this issue of ordinary kindly. Ni 200 inakuwa kidogo. They said the existing 10% holders Nasara were issued with fully paid ordinary shares of shillings 10 each. So they were getting, you get 5 shares for every shillings 100 for every shillings 100 of the debentures. In total, oh, actually this one will cancel this. Sure, that is why I was. So let me make that is true. Kindly, we have to multiply by shillings 10. Because you see the shillings will cancel, so we are remaining with the just ordinary, without monetary value. So it will cancel, then we get the number of ordinary times 5, then you multiply by shillings 10. So it goes to 2,000. That is true. Nimeshangaa kwani ni mchezo gani wameanza? 200 against 4 ni kidogo. So it is 5 for every shillings 100 times shillings 4. You see the shillings will cancel, so it means you will remain with the number of shares. Then again you multiply by the value, which is 10. That is true. So that is 2,000. So give me this one for debentures. Debentures is 1 for every shillings 100 times shillings 4,000 times each debenture was having a value of 40. So what do you get? Alima 1,600 versus 16. So this is 1,600. 1,600. Wamepoteza. Because in total, their loan was 4. Compensation is 2 plus 16. That is 3,600. They have lost 4. We don't have any option just to close it. So close it to realization here. So you say I don't have space, but write 2. To realization, they have lost 400. To realization, they have lost 400. To realization, they have lost 4. And now the 4 is on the debit. So close it on the credit side. So this is 10% debentures. 10% debentures. That is 400. That is 400. Good. So one more, so that we finish with part A comfortably. One more is what we call the purchaser's account. So the purchaser is the wording. So you come with the purchaser's account. Whenever you wamekuwa wakiwafanyia, you want ordinary debentures, shares, they have been compensating. So you come up with Zawadi's account to check how things have been happening. So Zawadi Limited, purchaser. So come up with the account in our books to close off successfully. Come up with Zawadi Limited account, which is the purchaser's account. So Zawadi purchaser. Purchaser, how does the transaction start? Invoicing them. Here, purchase consideration. Purchase consideration. Purchase consideration. You invoice them, walipe your kitu. So we don't know how much. In fact, this is the main issue. Looking for these things sometimes becomes subjective. But there's a short way, and it's what we are waiting for here to close off realization. So we don't know how much we are invoicing them. But back in our mind, let's ask ourselves, Zawadi has just been giving us ordinary, preference, debentures. They have been giving us a lot of things. Why are they giving us? They were giving so that they can compensate what we invoiced them, which we don't know. So to derive this figure, you know, customer on an invoice, akilipa, you credit the account. So we are going to credit Zawadi with whatever they gave us in whichever form. Kama ni shares, toa. Kama ni cash, toa. Hivyo. So in so many occasions, Zawadi gave us ordinary share capital. So I want us to sum up all the ordinary we have received from Zawadi. We credit there. So let's start. Nataka tukue keen from they started compensation from preference. So from preference, check preference sundry account on the debit side. The ordinary we received from Zawadi. Ilikuwa ngapi? From Zawadi. How much ilikuwa? I remember there was 2400. There was 24. Plus, was there any other? Was there any other in that account? 252. Yes, there was 252. Was there any other again? Was there any other from in that account? Hakuna. Let's go to ordinary sundry. Ordinary sundry also they were given. Wapi walipewa some ordinary? Ngapi? How much was ordinary? 2400. They got 2400. Debentures also have been given ordinary. Ngapi? The 2000. I remember the one which we have just done. They got 2000. So in total, this is the total ordinary we received from Zawadi. We are not relatives of Zawadi. They cannot give us for free. They are giving to compensate the figure which we don't know. So can you add the total ordinary? All right, 7052. I trust you. 7052. So tunaenda tu pole pole. What else? What else did we receive from Zawadi? Just check those ledgers. Ukiona tu moja tunaangalia kama kuna zingine. Just check one. What else did we receive from Zawadi? Apart from ordinary, preference share capital. Actually, they received what percentage? 10%. 10% preference share capital. 10% preference share capital. Was it received so many times? I think it was only once. Ama, maybe check for me. I think it was only once in the preference share capital account. If yes, how much? I think it was only once. Check preference sundry. Yeah, it was 1,600. So here, kuna 1,600. Also, I remember there was 8% debentures. 8% debentures. We received it once, no, twice. I don't remember where and where, but we received debentures twice. Check it in preference and in the debentures account. We received it twice. Good. 168 and 1,600. Nichape kwa total 168 and 1,600. Aki, please, I hope hakuna mtu naacha nyuma. This is critical for me. The 1768. Last but not least, hawa pia walitupea pesa. They gave us cash. Ndio tulipe dissolution cost. Imagine unafunga mpaka una pesa ya kulipa mtu anakufungia. It happens in the world. Touch. Kwisha. So all these items we have received from them, we received to compensate what we did not know here. So can you aggregate, sum up all this? We bring it here. So I've been given 10 for 50. 10 for 50. So to this company, that is what they have realized from dissolution. So the amount they realized, unaleta hapa. Hii tulikuwa tumengojea purchase consideration 10 for 50. We are done. We are done. So now Now, na sio tafadhali, lazima ibalance. Kwa mtihani hata usiadd, inaweza kupea pressure bure. Usiadd, wewe post assets, weka liabilities, maisha inaendelea. Lakini hapa lazima tuangalie. It must always balance. Otherwise, if it fails, there is a problem we encounter somewhere. So can you add the debit and the credit? If it is balancing, you tell me balancing with this figure. Hey, Mercy, why are you ahead of my mouth? Mercy anasema it is balancing with 14. Please, someone to verify. 14,282.9. Huyo Mercy mwingine amesema ni true. Hawa Mercy wanakimbia mbele ya trend. Ama the name Mercy is quite merciful. So wind up that. So examiner user the necessary accounts. Please, these are the necessary accounts to close those books. So we want to go to the journals. So the program venye inaenda, tunamaliza hii swali, tunachukua 15 minutes break, then we do the second question, then we are done. So we want to go to the journals. I'm only waiting for someone to ask if there is a question. Sawa. So allow me to go now to the next, the journals. Let's go to the journals. So B, tumevuka, tunaenda sasa kwa zawadi. Mambo ya hasara tumalizana. So B, journal entries. In accounting, any moment someone is telling you to give them journals, they are simply asking you which account should be debited and which one should be credited. So you tell me the DR and the CR. We start. So that's journals as mpangilio. You can start the way you want. But remember, the main purpose of the journals is to record the acquisition. So you can adopt this. There is a way I always want us to start. One, you start by recognizing zawadi as, not zawadi, zawadi. Recognizing hasara as a creditor in the books. Because you need to pay them the 10,450. Wamekutumia invoice. That is where the transaction starts. When they send the invoice, that fine, we have accepted, the company should believe it. This is the invoice. So the invoice was 10,450. That is where it starts. It starts at that invoice page. So how will I record that invoice? This is how you record it. You debit what is called business purchase account. So business purchase account. So with the 10,450, so you bring there 10,450. Just a minute. So 10,450. Then you credit hasara. This is a creditor. Umetumia invoice. Ukitumia invoice na supplier, you credit the supplier's account. 10,450. Like that. So the purchaser anakuwa na account network business purchase, then credit. So it starts at that invoice level. Ukipokea invoice, they have accepted you buy, recognize that invoice by crediting that company. So you need to give narrations. So because of space, nikiandika itaja, so you can write. And narrations are not standardized. You write whatever makes you happy. But we can say, to recognize the purchase consideration. To recognize the purchase consideration. To recognize purchase consideration. Then unafunga. You close. You close. Number 2. Ulipokea invoice. Nataka mumaster hiyo flow. Ulipokea hiyo invoice. What are you doing next with the invoice? Settle. Walipe hiyo kenye wanataka. So when you pay them, you reverse. You now debit the creditor. So you debit hasara limited with the 10,450. But how did we compensate the 10,450? We gave them so many things. One, ordinary share capital. I can't remember, but I think it was 70,52. How many ilikuwa ngapi? Let me see those answers. Don't prepare those answers kitambo. But I hope it is the one. We also gave them preference share capital. I think it was 1768. Please make sure unaangalia that account for those figures. 1768, I think, was the debentures. Please check for me. Was it preference was 1768 really? 1600. Barbara, this was 1600. So this was now 10%. Then there was 8% debentures. I think that's the one which was 1768 from that account. Yes. Then finally, we also received cash. Not received, we gave them cash. So we credit that account. So debit the liability, then show how they were compensated. Can you add? It should tell you this plus this plus this plus this. Check whether it is coming to that one. Then we are okay. Yeah, correct. So the narration nimesema kwa mtihani usikram easy, you just write anything which you have done. So this one you can just say on settlement on settlement of purchase consideration. On settlement of purchase consideration. On settlement of purchase consideration. So I want you to master the flow kabisa venye inaenda, because the journals unaweza shindwa kwa mtihani unaanzia wapi ukielekea wapi. So number one is to recognize the invoice. When you recognize an invoice from a supplier, you credit the supplier. Then number two, settle that invoice. So when you settle, you debit now the supplier's account, which is Asara, then show us how you pay. Once you're done with the settlement, now you're free to take over that company, once you've settled that invoice. So in taking over the company, debit all the assets taken over in your books. So debit all the assets here at the takeover value, not book value. Don't go back to the book values. Check the takeover values, which was in note 6. So you record those figures in note 6. You record how they were taken over. Don't go back to the book values. So number 3, PPE, available for sale, inventories, receivables, financial assets. Those are the assets which were taken over. Those are the assets which were taken over. So PPE, 94, 86.8, 810, 608.7, 477.1, 216.4. Then you credit the whole amount to business purchase account. So give me the total figure. So you record the taken over value. Hapo huwezi toka zero, never. So sum up all this. So I'm told the total is 11,599. You write anything, andika hapo. To record the assets acquired, or andika hivi, to record the assets taken over. That will be shorter. To record the assets taken over. You cannot record assets without recording the sister. The sister of assets is liabilities. So recognize the liabilities immediately after the assets. The liabilities, remember awali walikuwa compensated. The debentures usilete hapa. Debentures watu limazana story yao. The current liabilities. And the current liabilities was mentioned in note number, I saw it somewhere. Note number 5. Check note 5. The current liabilities of Asara were taken over by Zawadi at book value. So those ones, you just go back to the balance sheet, you pick them. So liabilities should be credited. So we always advocate start with a debit entry. So we'll debit business purchase account. Let's bring the liabilities then we feed. So liabilities taken over the current, bank overdraft, bank OD. Bank OD is 775.8. Payables 1962, tax 275.1. So sum up. So get this, wake up. Give me the total. On there, 3012.9. 3012.9. You can just write to recognize, to record the liabilities taken over. Liabilities taken over. Kama hiyo flow is the master. The way I know you people, that's a small flow. Because I know what comes with this journal. You have to figure out from mtihani, you and see what you can. So one, be practical. You know, journal is in the books of the new company. At what point does this all things start? It will start from the invoice. Leave alone the negotiation. Here we are doing the paperwork. The invoice. So record that invoice you're supposed to settle to that company. Once you bring that invoice, show how it was compensated. Once compensated, you are free now to take over. So record the assets, record the liabilities. Then, during takeovers from our group accounting, you know, this is business, like business acquisition. During takeovers, it is always advisable to assess if there is goodwill. Very important, because these people are taking assets with a value of 11,599, with liabilities of this one here. So the net assets, can you check for me? 11,599 minus 3012.9. What do you get? 11,599 minus the liabilities. What is that difference? To get the net assets. Get the net assets, how much? That difference, must say, and the rest, 8586.1. So the net assets taken over is 8586.1, but they were told to pay a total of 10,450. So the amount which is over and above the net assets is goodwill. Just allow me 1 minute. I received this code, just a minute. Yes, Joe. Hello. Okay. So we are very much grateful. Yes. So thank you. So why are they charging us over and above the net assets? The amount which is over and above the net assets is goodwill. That is what you need to know. So you come here and say goodwill. So goodwill is the purchase consideration, which is 10,450 minus, in brackets, 11,599 minus the net assets of 3012.9. How much is that? So just take 10,450 minus the answer you got there. Minus the answer you got somewhere there. And tell me the goodwill. Goodwill will say 1863.9. 1863.9. Then credit business purchase. Kila kitu hapa inakuwa business purchase. Account 1863.9. Then you say, recognize goodwill on acquisition. Recognize goodwill on acquisition. To recognize goodwill on acquisition. We are done with the journals. That is the end of the journals. How many marks? 6 marks. The way they will mark it is up to them. Bora wewe umemaster the flow. Funga macho uangalie kama unaona hiyo flow kwenye inaenda. Wenye tu sasa siwezi ona kama umefunga macho. But I want you to master that flow. The invoice, pay the invoice, you are free to take the assets, recognize liabilities, assess goodwill. Question. So don't forget about that flow. Correct. Let's go to the statement of financial position. Let's go to the, so we are in the books of Zawadi. So right there, Zawadi Limited, statement of financial position as at 1st April 2016. Hivyo. Good. So let me mute. So here, maisha itakuwa mzuri sana. Here, life will be very easy because the balance sheet, they just record the assets they took over. Where are those assets? This one. So just record these assets they acquired. So non-current assets, pick them in Journal 3, PP, the way they were acquired, 9486.8, available for sale, 810, goodwill, we have gotten 1863.9. Can we get that total? Can we get that total? $12,160.7. 12,160.7. Current assets. This one there, inventories. So just the taken over values. So inventories, this one here, 608.7. Receivables, 477.1. Financial assets, 216.4. Add. That is, mjanipea answer. $1302.2. So what is our total assets? Total assets. Total assets, 13,462.9. 13,462.9. Thank you. Equity and liabilities. Ordinary share capital. Ordinary share capital. So enda kwa journal hii hapa, journal 2. Go to your journal 2, pick them there. 7052, 10% preference, 16. Kuna kitu ingine 8652. Only those two. Then non-current liabilities. Non-current liabilities, this one. 8% debentures. Debentures. 1768. Current liabilities. So current liabilities, payables. So go to journal 4. Go to journal 4. Payables, 1962. Tax, 275.1. Bank overdraft. Overdraft, wacha tungojane hapo kidogo. Inaletanga issues. Haya. Bank overdraft, tunaona hapa 775.8. However, tuko na negative cash. Check negative cash somewhere in journal 2. There was a credit cash balance. Ile pesa walipeana huko. So they acquired, wamechukua deni yao na bado walikuwa wamewalipa hiyo pesa. So it's cash outflow. So plus 30. So 775.8 plus 30 should be 805. 805.8. So what is the total of current liabilities? What is the total of current liabilities? So current liabilities, I'm told 3042.9. Total equity and liabilities. Are we in order with our total assets? Do you see? 13,462, 13,462.9. So we are much in order. Hiyo kitu itakuwa safari refu, but once you know the tricks, inakuwa sawa. Tena sana. Inakuwa sawa. There's a question I would really want us to check, but we are taking a small break. Watu watayarishe wenye wanaenda kanisa ndio tuwafuate. This is the question I want. So after the break, November 2018. November 2018. November 2018. Question 2. Page 76. So open it, ukue ready now. Ukitoka to break pap, we are there. So it is 9:35. Let's meet at exactly 9:50. At exactly 9:50. Then we proceed. Tukimaliza hiyo swali mimi mambo ya reconstruction tumeachana hapo. And my prayer is we finish it. That is my humble prayer that we malize leo, so that we don't carry it ahead. So go for the break. So we are back. We are back. I want us to check that question. So allow me to read the question. It says, B Limited and H Limited are private liability limited companies operating in the service sector. They have been reporting successive trading losses for several years, principally due to severe competition, which has put downward pressure on the revenues. The directors of the two entities, who are also the main shareholders, have unanimously agreed to wind up the company's respective businesses and amalgamate them into a new company to be named as Limited, with effect from 1st October 2018. The statement of financial position of the two companies are set out below. So we have two entities, B and H. So they want to liquidate B, they liquidate H, then they form S. Correct. So their balance sheet, as we can see, Additional information one, the authorized share capital of the new company was 120, comprising 12 million ordinary shares of shillings 10 per value. Preference dividends in B were 3 years in arrears, while in H Limited, preference dividends are not being paid for 2 years, including the current year. Only 20% of the arrears of preference dividends were settled by issue of ordinary shares of shillings 10 each in S Limited. Okay. S Limited issued 3.4 million ordinary shares of shillings 10, credited at shillings 5 each, in favor of the preference shareholders in both companies. The ordinary shares were allotted on the basis of the preference shares held in the old companies. The preference shareholders committed to immediately pay the balance on the shares issued. Yeah, the balance in 5 bob, you know, they were given at 10. The probably was 10, but they were given at 5. So they will pay the balance of 5. The bondholders in both companies were settled immediately by the new company, issuing ordinary shares of shillings 10 each to satisfy the nominal value of the bonds. No problem. The new company also issued 4.6 ordinary shares of shillings 10 credited at 2.5 in favor of the ordinary shareholders in the old companies. The ordinary shares were allotted based on the ordinary shares held in the old companies. The ordinary shareholders were to pay the balance on their shares immediately. The current liabilities of the old company were transferred to the new company at their book values. The copyright in B expired upon amalgamation of the old companies and were transferred to and were therefore to be written off. The tangible assets were taken over, as we can see there. Liquidation expenses of B and H amounted to 8 and 5, respectively, were paid by S and treated as preliminary expenses. Assume that all the above transactions were completed. Fine. Required the following ledger accounts in columnar form to close off the books of B Limited and H Limited. Realization was the another column, maybe where necessary. So they want us to prepare realization account, preference shareholder sundry members accounts, ordinary shareholder sundry members accounts, journal entries in the books of S to record the transfer of assets and liabilities, ignore narrations, then opening statement of financial position. Correct. So we start with the realization account. So, you know, here we have two entities. We have B and we have H. So realization, you must prepare for B. Also, you have to prepare for H. So the best we can do is to combine them in one account instead of doing one by one. You know, you're supposed to do realization for each. Every item there you close for each company. B you close and H. So this is what you're supposed to do. We have to be careful. So hizo line zangu zinakaa fine. So shillings are in thousands. Now you know what happens. All the assets except intangible, debit them there. At book values. At book values. That is what you need to know. So PP 16.5 12. Intangible, you don't bring them here. So current assets, we have 52,500. We have 30. So record that. Then liquidation costs. So liquidation expenses. Right in full my space. I'm serving on my space. So liquidation expenses. Check note number, which one? Note number 9, 8, and 5. Eight and 5. Then preference dividends in arrears. So dividends in arrears. That was mentioned in note 2. Preference dividends in B were 3 years in arrears. While in H, preference dividends are not being paid for 2 years. So let's check the equity. Go to equity. Hii kazi nenye mnanifanyia kindly. You go to equity for H, for B. So let's start with B. You take 7.5% times the 10 for 3 years. Then for B, 7.5 times 24 for 2 years. And do for me those two, then you give me the answers. The first one for 3, the other one for 2. Can you give me those answers? Give me those 2 answers. Answers are ikuji. $2,250 and 1,800 or 15, which is which? Lucy and Mercy, naona mjapatana. The second one is 2 years. The second one should be 2 years. So it's 7.5. It is 7.5 by 24,000 for 2 years. That is 36. Can we confirm? Yeah, 36. So it's 2250 and 36. 2250 and 36. Lucy, I hope you have seen note 15 and 36. Lucy, I think wewe umetumia bado ya B. Kama umetumia gani? It is 7.5 times 24 times 2 years. So debits done. Let's go to the credits. We bring liabilities. The current liabilities. So let's bring the current liabilities. So current liabilities, we have payables. Payables, 37,200. 18,400. Bank overdraft, 2,000. 15. Purchase consideration, which is now kidogo, yes, money. Nzuri. Bado namaliza ile pale. Kwani kuko na wao? So I tell them. Oh. Okay. Sawa. Mimi alikuwa amepiga simu. S limited, the purchase consideration. So S limited, you can have it in bracket down there, purchase consideration. So that one must be left hanging. That must be left hanging. But now we go to this other. So this one you just leave it hanging. You don't have any control. Lazima uache hanging. We do this other accounts. Tufunge huko. So let me start with required. I must move in that order. Preference shareholders and members account. So preference shareholders, sundry, members, hiyo kizungu ni mingi, members accounts. Members accounts. So there, like that. Be ready. Be ready. I hope people are ready. So you say balance brought down. Check the capital under equity. So under equity, I'm seeing preference 10 and 24. What are the teacher P arrears? So arrears, dividends, this one here, 2250 and 3600. 2250 and 3600. Those are their total claims. So let's just see how they got compensated. So you debit the compensation, you say the compensation from S. So from S, tell me the note where they're being compensated. They're being compensated in note number 2 and 3. Note 2 and 3. They are being compensated in note 2 and 3. So let's start with note 2. Preference dividends in B were 3 years in arrears. Preference had not been paid for 2 years, fine. Only 20% of the arrears of dividends were settled by issue of ordinary shares of shillings 10 each in S limited. So they got ordinary share capital. They compensated only 20% of their arrears. 20% of their arrears. So what you do, and the 20% they were given ordinary. So take 20% of 2250, 20% of 36. That is what the examiner said. They got ordinary, but to the tune of 20%. So 20% of this, 20% of that. How much are we getting? So 20% times the arrears. In fact, niofungulia hapo bracket hapa, ordinary weka 20% times arrears. And give me the figures. For 50, 720. For 50, 720. That is how the arrears were paid. I want us to check how they compensated the capital. I want us to check how capital was compensated. Check note 3. S Limited issued 3.5 million ordinary shares of shillings 10, credited at 5 each in favor of the preference shareholders in both companies. So the 3.4 was to serve all. The ordinary shares were allotted on the basis of the preference shares held in the old companies. The preference shareholders committed fine. So another ordinary share capital. So they gave, they gave a total of 3.4. Total of 3.4 ordinary shares, but each was credited at shillings 5. How much is that? 34 times shillings 5. 34 by 5, we get 34 by 5, 17,000. So this is 17. That is 17. Then they said this 3.4 was to compensate all B and H. So how are they compensating? They have said on the basis of the shares held, basis of the shares. So the shares are here. The balance here is 10 and 24. 10 and 24. So for B will take 10 over the total. 10 over the total. Total is 10 plus 24, which is 34. So it is 10 over 34 times 17. H will take 24, this one, over 34 times 17. Evil. So can you give me those two figures, chap? So the answers have been given, 5 and 12. Thank you. So 5,000, 12,000. Whatever's remained, they have lost, they have gained. We don't want to know. Get the balancing figure, we close to realization. So can you give me the balancing figure? Help me with the balancing figures. So 6,800 and 14,880. They have been confirmed. The only thing I want to ask, like this side is less. So you say 2 to realization. You say here 2 realization. So we close it there. That is B is 6,800. This other one is 14,880. Debit. All of them are on the debit. So close them there. For preference, sundry. Hiyo story yote watu usiandike itakuletea time bure. Kitu important the preference na the word sundry. So this is 68. This is 14,880. Correct. We proceed. We proceed. We proceed to the next. Ordinary. So ordinary, shareholders, sundry. Me, once I have the name ordinary and sundry, I'm just good to go. I don't think this will be enough for me. So I will be compelled to delete this one. I want to use the same space. So I'll just replace here with ordinary. So draw something exactly like this. So ordinary, shareholders, sundry. So from S, we just remain S, like that. Balance brought down will just remain. Balance brought down. Arrears will not be there. Arrears will not be there. Balance brought down. Correct. Mean what? Yes. So draw that. Draw that, draw that. I believe you are done. If yes, let's go to the balance brought down. So balance is brought down. Balance brought down for ordinary 30 and 16. 30, 16. Under equity, please, I hope you are seeing equity. Under equity, you are seeing 30 and 16. Then there was share premium. Share premium, share premium 16 and 14. Retained earnings is negative. Bring it this side. So accumulated losses 23,400, 34,300. Record them, please. Record them. Hello. Ana class one hiyo tufanye. Ana class one unachika goji. Good. Then intangible assets, write them off. Upper. So there was copyrights. So copyrights, write off those things, 8,400. Copyright was only in B. Copyright was only in B. Then you say, now we want to see. Usually if I go from S, easily being written off. So you need from S. From S, please check additional information. Yes, number 5. Check additional information, number 5. Number 5. So number 5, the new company also issued 4.6 million ordinary shares of links 10 each, credited at 2.5, each in favor of the ordinary shareholders in the old company. So the way we did that other one, they gave 4.6. 4.6 times, they were credited at 2.5. They were credited at 2.5. So multiply that. So 4,600 by 2.5, it comes to 11,500. So how was it to be shared by the two companies? So go back to note 5. Note 5, paragraph 2. The ordinary shares were allotted based on the ordinary shares held. They were allotted on the basis of what they were having. So what they are having is this one, 30 and 16. So B will get 30 over 46. 30 plus 16 times the 11. 11,5. H will get 16 over 46 times 11,5. So give me the two answers. Give me the two answers. The two answers. How much? How much? So 7,500, 4,000. So let us ordinary share capital 7,500. 4,000. We are done. Nothing else. Balance. Balance, then we close to realization. Balance it, then we close to realization. The balances, please. What of note 4? Kindly allow me to check note 4 kidogo. The bondholders the bondholders is coming immediately after ordinary. Addition, bondholders unaleta immediately after this. Usually inakuja kama working, examine hata bank. These are the three are the ones which were required. So hiyo tunafanya tu kama workings. So it's coming after that. I hope umeona. Note 4 is about the bonds. Who has the balances for the accounts? Who has balances for the accounts? Mkinyamaza hivyo mnanishtua, labda something is not adding up. Are we okay? If yes, where are the figures? Najua ile minutes mnachukuanga, so mkinyamaza sana. So Alim has given the answers, 7,700, 2,900, all on the credits. Credit this side. So we are to realization, 7,700, then 2,900. 2,900. So kuja hapa useme ordinary sundry. So ordinary sundry 77 and 2,900. Back up. We are almost there. We are almost there. So for the required by the examiner, we have satisfied what the examiner required. But we can't close this account without checking the debentures. Here they call them the bond holders. You have to come up with the bond holders, then you come up with the purchasers account S to determine this, then we close up. So down there, I hope I can delete this. Down there, let's check the bond holders, what happened to them. Let's check the bond holders. So the 10% bonds, 10% bonds, 10% bonds, BH. Good. So brought down for the bond holders. Brought down for the bond holders. Bond holders was 20 and 15. So Adija, let's go to note 4, where they were compensated. Here they go down. They said in note 4, the bondholders in both companies were settled immediately by the new company issuing ordinary shares of Shillings 10 to satisfy the nominal value of the bonds. So from S, from S, ordinary share capital, the same amount, 2015. No balancing figure. There is no balancing figure. No balancing figure at all. They were given the same amount, but now ordinary shares. Ordinary shares. Alright. Let's wind up by preparing S limited account, the purchaser's account. So let's prepare S limited account, purchaser's account. I'm being very keen on this word purchaser's account because I've never seen them telling you to prepare purchaser's account, so you should look at. So purchaser's account. So have that. Have that. Alright. So purchaser, unaweka hapa purchase consideration. Purchase consideration. The invoice. You will invoice them. So that one we don't know. We don't know. But these people have been giving us so many things. So many things, they have been giving us ordinary. Kila mahali wametupea ordinary, ordinary, ordinary. So I want you to help me sum up. I want us to sum up. I want us to sum. I'm sorry. So ordinary, I want to sum up. Preference, share capital, ordinary share capital, bond holders. During compensation, I want to know how much in total went to this account. Either preference sundry, ordinary sundry, then bonds. So we have to separate them. So you have to be keen for B and H. So let's go one by one. Let's go one by one. Can you sum up for me the total ordinary which went to preference in B? Let's go like that. So check B. In the preference share capital account, how much went to B? Ordinary. Check for me. You have those figures. ordinary share capital which went to B. Rose is saying, and Angeline, 54.50. But preference here was 54.50. The ordinary which went to preference, in the preference share capital, preference sundry, ordinary which was given was worth 54.50. Can you check the ordinary to H in the preference sundry? Hapo kwa preference sundry, check the total ordinary. 12,720. Someone to confirm what Angeline is giving there. 12,720. Rose has also confirmed 12,720. One more person, because Angela and Rose gave me the first. So I should also check a third party there. Barbara and Lucy, yes, 12,720. 12,720. In the ordinary share capital account, B, check for me the ordinary. Ordinary share capital in the ordinary sundry. In the ordinary sundry. Check for me the ordinary. It was hiyo ilikuwa moja tu. I think it was 70. Yes, 75. This was 75. Then in H, in H, 4,000. Bonds bonds was just the same. They were given the same value, so I can just pick their value, 20 and 15. So the total ordinary in which was given to me, add this. So give me those totals and bring them here. So 32,950. 32,950. Then we have 31,720. They also gave us cash. Cash, they gave us 8. They also gave us 5. Question. So the sum, these are the only items we received. So the sum of the compensation is the purchase consideration. So this will be 40 when I add 40, 950. This other one will be 36, 720. Yeah. So transfer them. Huko. Ziende kwa realization. 40, 950, 36, 720. Can you sum up realization? We are done. It should balance. That account should balance. That account should balance. Cash, the cash nile nani Rose, cash is the dissolution cost they paid for us. The dissolution expenses. Ile pesa wanakupeanga. Hawakupei free. Wakikupatia utafanya nini? It will be part of purchase consideration. Yes, the one in note 9. True. The one in note 9. Msichoke, we are almost there. Hiyo part A ndio inakuanga na kazi mingi. Journals na balance sheet haina kazi mingi. So can you just confirm if it is balancing? So you say B balancing with this, H balancing with this, or not balancing, that we check. I hope they balance because your cousin, me. Kama unatoka mbio, hata mimi nimeanza kuchoka na kusikia njaa at the same time. We need to finish. So Angeline, B is balancing with 86,950. 86,950. Then H 71,500. So thank you. Thank you, thank you. What has made me to do this question? There are so many questions there, but the years resemble the one we did. Hii iko na hizo mbili, mtu asiende kwa mtihani au kuseme wewe kimeumana. Hapana, ukipata hata 8, you just do the same thing we have done. And I pray they bring this one. So now let's go to the journals. Journals, we are now in the new company. So we have forgotten about B and H. Now we are opening books of S. So allow me to delete this. So journal entries. Journal entries. Huku wala walisema narrations hawataki. Ama nimeona nini? Did they say? My own thinking. Yeah, ignore narrations. God is good. We don't even want it. Say narrations and we don't need it. That waste your time. So debit, credit. So can you take seconds? Take second, unafunga macho, uangalie ile flow kama bado unakimbia. It's good you are alone, so hata ukifunga macho huko hakuna mtu anakuona. So funga macho uangalie hiyo flow. You as you. Kama ijaingia vizuri kuna step umeona umeruka, rudi kwa ile umefanya, angalia hiyo step. Because the same step is going to be used here. So we are good to go. So number one, you need to recognize the purchase consideration. Your invoice. So those can calculate right now the purchase considerations. So you come here and say business purchase account B limited, H limited. B was how much, but mmelipea tu sahi, so panazishapotea. B was how much? The purchase consideration. Purchase consideration for B and H. How you can combine them for me? B was 4950. 4950. Hiyo ingine 36,720. So sum up for me the two, this plus this, tuweke kwa business purchase. $77,670. They have said no narration required, but narration is the same to come as the Number two, pay those things. So reverse the entries. So debit the suppliers there. Then show how they were compensated. So ordinary share capital and cash. Cash, I remember, it was 8 plus 5. This one I remember, 13. Can we add the total ordinary which ends to B and the one which went to H? B ordinary was how much in total? The total which went to B. I can't recall those figures. B, mkona hapo kwa B, the total ordinary. Check, angalia S account. Ukiangalia S utazipata haraka sana. It was 32 something. It was around 32,950. So 32,950 plus H. H was around 31. Because zimekaribiana. 31,720. 31,720. So add and give me the total. Add and provide the total. Total comes to 32 plus 31, 60 what? 64, 670. 64, 670. Number 3, bring the assets. So in the books of S, hakuna haja to mention B and H equal. You just combine the items because H is operating as one. So bring the assets taken over. Check note 8. Note 8, PP, you will add 12,5 plus 9,5. I think that is 22. Number 20, which one? It is 22 or 23. Please check to confirm, but that should be 22. Then current assets is 58 plus 38, 600. Add the two. We get 70, no, that is 80, ama karibu 90 huko. 96, 600. Business purchase. So credit the total. Take this plus this. Then you take it to the total. So do that. $118,600. 118,600. Let's record the liabilities. Let's record the liabilities, in which case the liabilities are supposed to be credited. Liabilities are supposed to be credited. So it means you will debit. The noise in the house is just too much. So debit business purchase. For business purchase, we can't get it because we have to bring the liabilities. For the liabilities, they say, check note number, which one? 6. The current liabilities of the old companies were transferred to the new company at their book values. So the way they are, so payables went there at 37,200 plus 18,400. Bank overdraft, OD, 2 plus 15. 2 plus 15 is 35. So give me the one for payables. Give me payables. Give me payables. Payables is 55. 600. Good. 600. This plus this will give us a total of how much? So 59,100. 59,100. Hiyo tumemaliza. Good. Good. Number 5, let us assess goodwill. We'll say here goodwill. Goodwill is total purchase consideration. Total purchase consideration is this one, 77,670. So 77,670 minus net assets. Net assets is the total assets acquired, 118,600 minus the liabilities, 59,100. 59,100. Then you credit business purchase. So tell me the figures. So work with the bracket first, is when you subtract. You should about one. Finish with the bracket, then the other one. So goodwill Ken is getting 18,170. Confirmed by Angeline there. 18,170. 18,170. Correct. So mostly inafaa hiyo kitu inafaa ishe hapo. But this one we are going for one more. This one we are going for one more because of note number note number 3 and note number 5. Note number 3 and note number 5. Number 3 and note number 5. Note number 3 and note number 5. These people were giving out shares. Then the shares, the par value was 10. Lakini wao walikuwa na credit at 5. Then they were saying down there that goodwill is not visible. Adija, goodwill, hata kama si visible, you're supposed to get it. Assets acquired minus the liabilities acquired, you subtract from purchase consideration. I hope Apple somehow better. So I was saying, these people in note number 3, they gave out 3,400 shares. Then the par value was 10, but they were credited at 5. Then they said the shareholders accepted to settle the balance. Even in note number 5, they gave out 4.6. Par value was 10, but they were credited at 2.5. These people will settle the balance later. So if they settle the balance, you debit the cash book. They accepted to pay. So cash book, you will take 34 by the balance, which was 5. Balance was 5 because they were credited at 5. This one is 46 times. So which price are we multiplying with? 46 times what price? Times, correct. People are Angel in Apana, yeah, Martin Asema 7.5. You see, the par value was 10. Then they credited, when they were giving them, they credited them at 2.5. So the balance is 7.5. Angela, you umelewa. So 7.5 is okay. Times 7.5 because it was 10. They gave them, when they were compensating, they gave them at 2.5. So they will pay the balance of 7.5. So take this plus that, give me the total. So they are paying for the balance of the shares. How much? Total? Total Rose 51 kidogo 51,500. Credit ordinary share capital. Rose, you know, when you are buying a company, you can buy by giving those people shares instead of giving them cash. So our shares had a value of 10, but giving them quotes for free, they gave them at 2.5. You are you are giving them to compensate. But when they come this side, they will pay the balance. So par value, if you check that note, those notes, the par value was 10, but they gave them at 2.5. 10 minus 2.5 is how we are getting the 7.5. Rose, umelewa? Have you understood? So ordinary share capital, 51,500. They were paying for shares, so the shares will increase. Yeah, good. We are done. We are done. S Limited, statement of financial position. Statement of financial position. As at, so non-current assets. So have that. As at 1st October 2018. So be ready there. So my students are much ready. So pick the assets here. VP, check journal 3. Total is 22. Goodwill. Goodwill. We have gotten goodwill of 18,170. So this is 40,170. Higher. Then current assets. Current assets here, check journal 3. Check journal number 3. You will see current assets of 96,600. However, there is cash book. Cash book, this one here, 51,500. So you top up 51,500. Then there is this cash which they gave out. This one here, journal 2. Check out your journal number 2. But your journal 2 policy money. There's something they were trying to say, which is not making me happy. A book it over to. I want to see something. No. No, January 2 to let happen because we're gonna overdraft. I'm seeing overdraft here in January 4. I'm seeing an overdraft in January 4. I'm seeing an overdraft in January 4, but I'm thinking of getting the aggregate of all of them because I'm thinking of getting an aggregate for all of them to avoid a lot of stories. That will save my time. What we can do, because this is cash, we have cash here of 51,500. Then we have a negative cash in journal 2. We have a negative cash of 13. So I can subtract this 13. Then I also subtract the overdraft in journal 4, overdraft of 35. Because I have more cash, so I can utilize that cash to offset these balances. Yeah. But I don't see examiner marking a student wrong. Ukichukua 96 plus this, then these two you treat them as overdrafts down there. But ideally, what should I have up there and then down? Where we offset is obviously. So 96,600 plus 51 minus this 13 minus this negative. What do you get? What do you get? 131,600. 131,600. So total assets will be how much? Total assets. Total assets comes to somebody 171,770. 171,770. Equity and liabilities. Equity and liabilities. Ordinary. Share capital. So check your journals. We have ordinary twice in the journals. So check journal 2. What was the total value of the ordinary there? Check for me the ordinary in journal 2 there. It was coming to how much? You may have just written it here. How much is the total? 64,670. 64,670 plus, check the last journal. The last journal, the one, the shares they paid for in cash, 51,500. Can you add the two? Add the two. Add the two. 116, 170. 116, 170. Current liabilities, payables. Payables, check journal 4. For journal 4, you see payables to be 55,600. Hiyo tu, hakuna kitu kingine. Bonds walilipwa. They were compensated in full. So total equity and liabilities. Total equity and liabilities. Are we in order? Are we in order? 171. 171, whatever. 171, 770. The next question is May 2021. I'm looking for a solution as we talk. Nataka kuwatumia for that. So check right there, assignment, May 2021. May 2021. Question 2, May 2021. Question 2. Hiyo nawatumia solution. So make sure umeifanya. Then you compare. You compare with the answers which I want to share. Someone has just shared with me. I hope that will save us time. But I believe wakileta external, hakuna mtu atasema, oh, I was not ready for it. So, let me share this. One I've shared. Early morning. Early morning, mko wapi? Early morning is here. I've also shared. So I'll share with you the solution to that. Lawrence is saying, hello, when will you provide yesterday recording? Yesterday ilikuwa evening and morning. I think I should provide them now. Wacha tukimaliza switch off, I just do it. Then, do you have a solution of deck? Someone is asking, do I have a solution for deck 2022? Yeah, I think December I did it in a city. Let me get it. Rose. I thought to switch off. Let me see, just December 2022, I think. The person I told to share, I should be having. It don't go to, don't switch off. That's December 2022 thing. Yes, Rose, I have it, so I can also share. That question 5. So let's just wind up. I'm sharing right now. Adija, add me sound. Okay, thank you. So have a nice Sunday. Early morning. We have a class at 7 p.m. today. Or do you propose we start at 6? I'm flexible. I'm quite flexible. 6 or 7. Evening, you can just start logging out. Ongea na wenzetu. Rosi ndio hiyo najaribu kupropose hapo, uniambie. Six Beryl. Angeline 6. Adija 7. Propose there, propose ndio tujue. So Adija, it seems many people are proposing 6 except wewe na Alima. So we can start at 6. Also, I'll be recording, so haina issue kubwa. Watu wa 7 pia wamefika. So what do we do? Let's strike then katikati. Let's start at 6:30. Purity. Let's start at 6:30 so that I don't disadvantage many. Najua Sunday inakuwa na maneno mingi. So yeah, 6:30 is appropriate. So thank you. Do have a nice day. We meet at that time. Asante.